Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 10 best automotive, vehicle, and electric vehicle companies to buy right now. So while we're going over this list, I will tell you my own thoughts and opinions about these companies, and we'll talk about which ones are the best ones that are set to surge in the future. So for more videos just like this one, don't forget to go and obliterate that like button right now. Go ahead and annihilate it. Subscribe if you are new. Comment down below your favorite electric vehicle or automotive company down below in the comments, and without further ado, let's jump right into today's story. First, we're going to start off with Fisker Inc., ticker symbol FSR, and remember, these companies are in no particular order. Fisker Inc. manufactures, advertises, rents out, and sells electric vehicles. And this company is divided into three main business segments. The first one is called the white space. The second is called the value segment. And the third is the conservative premium segment. And all three of these segments work together to bring the company revenue. In quarter 4 of 2022, Fisker said they manufactured a total of 56 vehicles, which is honestly not that impressive. The company has already requested and secured the necessary parts to assemble their initial 300 automobiles, as well as some long-term lead components as we enter the second quarter. So despite the overall promising guidance for 2023, they do have an edge compared to other electric vehicles, because remember, Fisker is still trying to get off the ground here. The reason why Fisker is not producing more vehicles is essentially due to the macroeconomic downturn that we have experienced, and that's why professionals have taken this into consideration when giving them a price target. For instance, a Citigroup analyst believes that Fisker will meet their near-term obligations, and they also believe that Fisker's low market cap will give them a better opportunity to scale their overall share price than a lot of their peers. Therefore, investors could experience a lot of upside opportunity, and that's why Citigroup analysts have a buy rating on this stock with a $21 price target, which is a huge increase from the current $4 share price right now. So you could literally more than quadruple your money. For me personally, I do not own Fisker in my personal portfolio, but according to the Citigroup analyst, he is very bullish on this overall stock and company. So I'm going to leave that up to you whether or not to invest into Fisker or not. However, I do not hold it in my personal portfolio. They are just not scaling fast enough for my taste compared to their competition. Up next, we have XPeng Inc., ticker symbol XPEV. XPeng is a Chinese electric vehicle manufacturer that really specializes in intelligent electric vehicles. They have phenomenal autonomous driving technology, and it really puts them technologically above a lot of their competition over in China. What I also like about this company is that they delivered 7,002 smart electric vehicles, which represents a 17% increase month over month, which is very impressive, bringing their total quarter 1 deliveries to 18,230 vehicles. A Barclays analyst regarding their quarter 4 results said that their overall results were somewhat weak and their delivery guidance for quarter 1 are quote-unquote soft. But despite that, they believe XPeng's new products will start to gain traction later throughout 2023. As a result, that's why Barclays maintained an equal weight rating on this company with a share price target of $8, meaning that right now the company is somewhat fairly valued considering that XPeng is trading at $9 per share right now. I personally do not own XPeng in my portfolio because I do believe there are other companies on this list that I like a lot better, so why would I waste my money on XPeng at least right now? The only thing this company has going for it is their autonomous vehicle driving technology. However, let's move on to a company that I do own in my personal portfolio, which is Li Auto Inc., ticker symbol LI. This is another Chinese company that designs, produces, and sells new energy vehicles. Their main product is called the Li One, and that's a 6-seater smart electric sport utility vehicle, which is extremely popular. Li Auto also has phenomenal delivery numbers regarding how they have sold 20,823 automobiles in March of 2023, which is an 88.7% increase on a year-over-year basis and a 25% increase on a month-over-month basis. So far, Li Auto delivered a total of 52,584 vehicles in the first quarter, representing a 65.8% increase year over year, which is phenomenal growth. So the cumulative number of Li Auto vehicles sold reached around 309,918 as of the end of March. So compared to the other companies that we have talked about, this company not only is selling and delivering vehicles very aggressively, but they are also an impressive company. Also, a Morgan Stanley professional has a price target on this company of $30, which is an increase from their prior price target of just $23. Currently, Li Auto trades for $20 per share, meaning that there is a lot of upside potential for this particular company as 2023 continues to progress. Next on our list, we have another company that I personally own in my portfolio, and that is NIO Inc., ticker symbol NIO. This is the last of the Chinese EV makers that we will mention on this list, but as an honorable mention, we should also incorporate BYDDY or BYDDF, also known as BYD. They are the main company over in China regarding electric vehicles. However, I think Li Auto and NIO are holding their own. NIO specializes in the design, development, manufacturing, and sales of smart electric vehicles, including SUVs as well as sedans. The reason I like NIO specifically is I do think they have a technological advantage in their battery technology and charging stations, and here's what I mean. NIO provides a multitude of various power solutions, including home charging, battery swapping technology, fast charging, as well as mobile charging. So through their very diverse set of charging networks and power stations, this company is absolutely phenomenal. And what I like most about them is their battery swapping stations, because they can swap a battery far quicker than any of these chargers, including superchargers, could charge a battery. They also allow their overall customers to rent their batteries, making their overall vehicle a lot cheaper. NIO delivered a total of 40,052 vehicles in quarter 4 of 2022, which marks a 60% increase from their quarter 1 2021 results and a 26.7% increase from their quarter 3 2022 results. So this company is rapidly growing. A Morgan Stanley expert even commented that this company is undervalued. However, he did lower his price target from $16.10 to $12. But regardless, this company is only trading at $7.50, meaning that there is still huge upside potential in this company. For investors in NIO, the second half of 2023 is when this company is set to shine. So during the first half, you want to get this company as cheap as possible so you can end up making profits and growing your overall value in this company as time progresses, specifically in the second half of 2023. Next, we have another company I also have in my portfolio named Stellantis N.V, ticker symbol STLA. And this is a gigantic company that designs, engineers, manufactures, distributes, and sells various automobiles. These automobiles would include luxury and premium passenger vehicles, as well as pickup trucks, sport utility vehicles, and commercial automotives. Stellantis also has a very impressive dividend, giving investors a $1.42 payout every single year. Professionals are flocking to this company because it's only trading for 16 cents. Experts have a buy rating because they believe this company could surge up to $41 by the end of the year, and I think that this company not only could give you phenomenal growth, but because it also offers a pretty impressive dividend for an automotive company, you're getting the best of both worlds here, both growth and dividend income. Now let's start breaking into the top 5 of this list, but remember, these are not necessarily in order. At least I would personally put them in a different order. Next up, we have Rivian Automotive Inc., ticker symbol RIVN, and Rivian produces and sells electric automobiles and their accompanying parts. A Morgan Stanley professional has an overweight rating for Rivian, who has a very impressive deal with Amazon to make new and improved last-mile delivery electric vehicles. This price target currently for this company ranges from $24 to $26, meaning that right now, because the company is trading at $12 per share, this company could potentially double. However, I do not own it in my personal portfolio. I do think the company could get a little cheaper before I decide to dive into it. The main reason for Rivian's overall decrease in their share price is due to production delays, industry-wide challenges, supply chain issues, and of course, intense competition in the electric vehicle space. The bull case says this company could be worth up to $45, which I honestly reject. I think that's too bullish. Well, the base case scenario is a $24 price target, which is much more digestible and realistic. However, always make sure to do your own research before you purchase any of these companies. Next on our list, we have Ferrari, ticker symbol RACE. Ferrari designs, engineers, and manufactures, as well as distribute their amazing one-of-a-kind cars. This stock rose significantly after revealing that they have a record-breaking order list, which gives them a backlog of work all the way until 2024. Meaning that they have work for this year as well as next year until 2025, and of course more orders are going to be flooding in. A Goldman Sachs professional has a neutral rating on this company, and I agree with that rating because their price target is $283 while the current share price is $278. So I would say right now this company is actually fairly valued, but if you want to add some stability to your portfolio, and if you think this company has a phenomenal growth runway, then this could be the company for you. Up next, we have a company that I am not a fan of in terms of their overall stock, and that would be Ford Motor Company, ticker symbol F. This company develops, designs, and services a range of various Ford vehicles. This is one of the automotive companies on our list that does have a quarterly dividend of 15 cents per share, and they're currently trading for $12. A Citigroup analyst has a neutral rating for this company, and they believe this company is fairly valued at around $12, because even professionals say this company should be worth around $12.50, and that is why I am not buying Ford, even though I know some people really like them. Up next, I feel the same way about General Motors, even though I think General Motors is actually a little bit better than Ford as of right now. This is another multinational corporation that's headquartered in the United States, specifically in Detroit, Michigan. The company, of course, manufactures, designs, markets, and distributes their vehicles globally. Right now, they're trading for just $33, while professionals from Barclays believes the company could surge between $45 to $46, meaning that there is still upside potential in this company. For me personally, I do think that there are just better companies out there instead of General Motors, even though that this would be another company that will be around for decades, such as Ford. But as of right now, I feel more risky investing into some of these newer electric vehicle companies because I believe that there is further upside in them because Ford and General Motors are already so large. Now, at our number one spot, it's going to be no one's surprise that Tesla is number one, and it's also going to be number one for me personally. Tesla is the electric vehicle company that I own the most of. It would be Tesla, then probably BYD, and then NIO and Li Auto, and then Stellantis. Those are the companies that I really gravitate toward among these electric vehicle companies. Tesla is not just an electric vehicle EV maker, however. They also specialize in energy storage as well as energy generation. A Barclays analyst maintained an overweight rating for this company, and he believes this company could actually be worth $220 by the end of the year, and considering the company is just trading for $160 right now, there is huge potential upside for Tesla. So I'm very bullish on the future of this company, and I can't wait to add more to my portfolio once the company drops a little lower in price. But I would love to hear your thoughts on all of these companies. Remember to go and obliterate that like button right now. Comment your thoughts down below. Subscribe if you are new, and I'll see you in the next YT video.